Will the SBI Life Smart Platina Plus plan give you guaranteed income as promised and help you create long-term wealth? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand what is this policy is about. So this is a non-linked, non-participating life insurance savings product from SBI Life. Some of the key features of the policy are: you get security, which is life insurance protection for your family during the policy period, and you have two options to choose between two income plans to meet your financial needs, and you also get a regular fixed income each month for the payment period you need, and at the end of the policy term you get 110% of your return, and there is the flexibility to choose the payout period and to modify the frequency of your income payouts before the payout period, and you also have income benefit frequency options, and the premium payment options are also limited, and there are tax benefits under this policy. So these are some of the key features of the policy, and as I have already mentioned, there are two plan options like life income and guaranteed income. So depending on your choice, you can get your money in yearly, half yearly, quarterly or monthly payment installments. And there are also various benefits like maturity benefit, where in both life income and the guaranteed income option you will get 110% of your annual premium term at the end of your policy term as a maturity benefit. And also it has benefits like survival benefit, where in both options you will get a fixed regular income during the payout period based on the frequency you choose. And in death benefit, it is payable for differently for each option. So if you want to know more about it in detail, you can refer to the policy brochure. So it has benefits like this. Now let us understand some pros and cons of investing in this policy. So the pros are: the frequency of the income payout, which is your survival benefit, can be changed in the later stage. However, a policy holder can change it only once, that is within 9 months from the date of expiry of your premium paying term, and you can get a life cover till the end of the policy term. There is a flexibility to choose your premium paying term and payout period, and you can avail 50% of your surrender value as a loan. The rate of interest is 150 basis points greater than the GSEC rate, and if you want to surrender your policy after the free look period, then you can surrender it after paying your second premium term. So these are your pros, and the cons are: in the income option plan, once you choose the life income or guaranteed income option, then it cannot be changed. The income payout is also a fixed one. It is not adjustable to inflation, so it will not be enough to manage your expenses. So it will be a great disadvantage to meet your increasing expenses. The sum assured will also not be sufficient to manage your family's financial needs after you, and it is an insurance cum investment plan, but neither will be beneficial for you, and you can get a loan or surrender the policy only after the completion of 2 policy years. So these are some drawbacks that you need to be mindful about before deciding to invest in this policy. Now, as we have a basic understanding of this policy, let us now analyze this policy. So we are going to analyze both the options in this policy. First, we will analyze the life income option. For example, let us assume that a policy holder called Mr. Ravi, a 35-year-old engineer, purchases the life income option plan of the SBI Life Smart Platina Plus plan. So he decided to pay 1 lakh as premium per annum for 10 years. So the payout duration is 15 years. The policy term will be 26 years. So here later, from the 12th policy term onwards, he will receive a regular income of 93,790 rupees per annum. It is 93.79% of the premium term he paid per annum. So at the end of the 26th year, he will get a maturity benefit of 11 lakhs, which is 110% of the total premiums he has paid. So if unfortunately he passes away during the policy term, then the nominee will get the highest sum assured by the policy as death benefit. So the analysis part of the life income option clearly states that despite being a long-term horizon investment product, the returns in this policy are not that convincing. And if you take a look at the guaranteed income option, like let us assume that Mr. Ravi purchased the guaranteed income option instead of life income option, then still it would be almost the same because he will receive 91.03% of his annual premium paid as a regular income. So when he passes away during the payout term, let's say like during the 7th year, if in case he passes away, then his nominee will receive a sum assured of 11 lakhs. So if he passes away during the payout term, then his nominee will receive a death benefit of 12,77,218 rupees and will continue to receive the regular income of 91,030 rupees. So this plan might look better as in case of unprecedented death of the policyholder, the nominee still has the opportunity to receive both death benefit and regular income. But is this enough to consider this insurance plan to be purchased for 26 years? And can this plan really help you reach your financial independence? Let's compare this insurance plan with other investment plans available in the market before making an informed decision. So in the alternative strategy, we are going to separately invest in insurance and investment vehicle to assess the efficiency of both products separately. So here we have opted for a pure term insurance policy where the sum assured is 11 lakhs, policy term is 26 years, premium paying term is 10 years, annualized premium is only 12,600 rupees. So most of the metrics are similar to the SBI Life for a fair comparison. And if, as you can see, we are paying 1 lakh premium in the SBI policy, but here we can allocate the same premium efficiently by only paying 12,600 as the annualized premium while saving the remaining 87,400 to be invested in an investment vehicle of our choice. So we have chosen ELSS mutual fund, which is a market linked product as an investment vehicle because our time horizon is a long term time horizon. For that, a market linked product will give us high growth and high return potential. That's why we have opted to invest in ELSS mutual fund. And if you look at the track record of ELSS as well, you can see that if you choose to invest in it for like 7 to 10 years, it can even outperform in certain cases where it has outperformed its average 12% benchmark as well. So we have opted to invest in ELSS mutual fund considering we have a long-term investment time horizon. So the tenure here is for 10 years and with ELSS interest rate is 12% with moderate risk. When investing the remaining amount in ELSS, the IRR comes to be, which is the internal rate of return, to be 8.01%. This is the return we get in our hands. So after 12 years, the maturity value of ELSS will be 21.54 lakhs, which is the pre-tax value. After accounting for the capital gains tax, the post-tax value is 20.10 lakhs. And if you want to know how the ELSS tax is calculated, we have presented a separate tabular column on the screen for you, which you can look at for reference. This amount can then be invested in an instrument yielding a return of 7% per annum. So this investment facilitates annual withdrawals similar to the SBI Life Smart Platina Plus plan. So after the regular annual withdrawal, this alternative investment strategy generates an IRR of 8.01%. So if you refrain from annual withdrawal, the returns would be better due to compounding. As we can see in the example of SBI Life policy, it proves that it will give you a return that is lower than bank FDs and it can hardly beat the inflation rate. So that plan failed to produce convincing return. And for life insurance coverage, you can actually choose pure term life insurance policy at an affordable premium. On the other hand, both PPF, if it is for conservative investor, it is an option, and ELSS seem to help investors produce adequate corpus with better liquidity. So what is the final verdict? Should we invest in the SBI Life Smart Platina Plus plan or not? So this policy gives you a return that is equal to bank FDs or even lower than bank FDs. So also the high agent commission involved in this policy further reduces your overall investment value. So if you're planning to purchase this insurance policy for the long term investment time horizon, it will not help you to grow your wealth or it will not give you an inflation beating return. So the insurance cum investment policy neither serves as a good investment plan nor as a good investment scheme compared to investment or insurance. So if you're looking for an investment and insurance plan for the long term, then you can choose the combination of pure term insurance and PPF or pure term insurance or ELSS, as it is a PPF is a risk free investment while ELSS is a risk market link product, still it gives you better high growth and high return potential. So if you think you can take a risk, then you can choose the other investment options such as mutual funds, like equity mutual funds. But do not conclude your opinion of this policy just based on reviews on social media platforms like Quora, Twitter, Facebook, etc. It is always wise to take the advice of a professional financial planner.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.